You now have 3 days left. 3 days left to break out. If you don't break out in the next 3 days, you should see a big sell-off next week.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
This is a holiday week, meaning you have Good Friday coming up. The markets are closed, at least the U.S. markets are closed. Most markets around the world will be closed as well. Crypto markets, of course, they are staying open. That's just the nature of crypto, 24/7, 365. But the bottom line is, ADP private sector came out 8:15 a.m. Eastern time, came in at 145,000 jobs created. That's private sector only. That's not the big jobs number coming up later this week. That's just the private sector. Now investors were expecting 210,000. So it was a weaker number than expected. Now, what does that mean? Well, weaker number initially is good news, right? Because it means the Fed may hike less. Maybe they'll even pause at the next meeting in May. However, this is the kicker, guys, and this is something I have said for a long, long time, is that bad news will eventually become bad news. Now, why the heck would the Fed stalling out on hiking and maybe even pausing rates, in terms of hiking, be a good thing? And the answer is, or bad thing, I should say. And the answer is very simple. It tells you the economy is slowing. As long as inflation's above 2%, the Fed cannot cut rates. Okay, so again, there's this lot of hype out there, people hoping and praying that the Fed will cut rates. It is not going to happen. Jerome Powell has said that to the nth degree, that he is not going to cut rates because he doesn't want to repeat what Paul Volcker did in the 80s, where he cut rates too quickly and inflation roared back exponentially fast. So again, guys, the bottom line is you're starting to see the futures actually weaken a little bit on that slightly worse than expected jobs number. Now we'll see what the jobs number is in the coming days for the non-farm payrolls report. But the bottom line is we're looking at, I think, a starting switch point where bad news means recession. And the recession is even worse this time because the Fed cannot cut rates and print money as aggressively as before. All right, let's get right into the charts. Here's the S&P 500 chart. Take a look, guys. And again, on the S&P 500, look at yesterday's high, right into a down-sloping trend line. I love this stuff, guys. Again, this is what brings me into you guys every single day. Take a look at this. When we look right there, we look right here, and then look at this pivot point right there. Does it make sense that the markets opened higher, pulled back? The answer is, just from this chart, absolutely. The markets ran almost vertically into a brick wall, this trend line being a brick wall. Now remember, when you run into resistance, the general prognosis is a pullback. The question is, after you pull back, do you break out or do you break back down? All right, so there's two possibilities here. One is we consolidate in a bull flag where we start to do sideways consolidation. And this is really key, guys. A bull flag is noted by a 90 to 45 degree angle. Let me zoom in on myself because I want to show you guys this. All right, again, a bull flag is a general vertical move. Bull flag starts with the consolidation. It's either 90 degrees or it can be a slope of 45. Anywhere between 90 and 45 degrees, that is okay for a bull flag. That's what we're looking for here. Do we get that bull flag consolidation pattern, or do we just see a sharp pullback? In my personal opinion, I think the markets are very close to a major pivot. I've done calculations. I've looked at cycles. We're very, very close. Going into next week, we may see a sharp turn lower in the S&P 500. Gold staging another up move today. This is real-time action on gold right here. Another green candle. Look at the flag pattern breakout, guys. Again, flag. Look at that pretty flag. Here's your flag pole. And this is what I talk about in flags, right? So look at the angles of this. It's a sideways consolidation that's generally 45 to 90 degrees. And again, it forms this sideways chop. That's consolidation or digestion of the recent up move. That's very, very bullish. Notice how it happened above this down sloping trend line. Pivot high right here, right? Pivot high right here. And then here we broke out, we retraced, we consolidated, now we're breaking out. Where's your short-term target? Right up here. So you're looking at 2075, 2080 double top. It actually would be a triple top. I'm going to do 19x. Let's not get fooled by that. All right, 9x was in a world without Bitcoin, without a lot of alternatives for investments. Do I think we can do a 3x? Yes. Do I think we're going north of 5,000 over the next couple years? I absolutely do on gold. But Bitcoin will take some of that up. Speaking of Bitcoin, let's go to it because we have some big stuff to discuss on Bitcoin. So Bitcoin, again, guys, continues to hammer on this upper level. I'm going to tell you this. You now have 3 days left. 3 days left to break out. If you don't break out in the next 3 days, you should see a big sell-off next week. So ticking, 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 tick-tock, 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 right? We're looking at a scenario here by the fact that we're seeing Bitcoin has struggled here. Even when the U.S. stock market was ripping higher, we saw the dollar collapsing yesterday, breaking a key trend line. Bitcoin's not breaking out here. What's going on? Well, needless to say, it's at a pivotal level. Literally for the last month, I've been saying, guys, watch the 28,500 to 30,500 level. That is your major resistance level. That is the biggest level in Bitcoin, the biggest by far level in Bitcoin. All right. And again, that's the key here to understand that that is your level. But the bottom line is that when you're trading, you have to think counter trend. All right. There's only one situation where I go with trend, and that's when you have a bull flag off of a move up. Then the bull flag added with a time count, and time counts I teach in the Winning Trader series at verifiedinvestingeducation.com. That's what it's all about. But otherwise, for me, I'm a counter trend trader. Why? Because generally when you get max bullishness, the top is going to be in. If you have 10 investors in a market, doesn't matter what market is, rocks, oil, natural gas, doesn't matter. The bottom line is if you have a scenario where you have 10 investors, and in the beginning, no one's bullish, and that means you have 10 people that can buy. Now 50% are bullish. So the stock has moved up. The crypto's moved up. You're now at a point where, 5 people have bought. You still have 5 more that can buy. When you get to max bullishness, all 10 have bought. What happens? Is there anyone left to buy? Nope. And then all that has to happen is one person to be nervous or want to take profits, and then things start to collapse. So by using technicals, I'm able to pivot, find the pivot tops and bottoms. People say, don't catch a falling knife, don't catch a shooting star, or don't short a shooting star. I say, don't do it unless you know how to read charts. Charts are your inside view into where the high probability levels are for a bounce. Obviously, you want to pay attention to what's going on with the stock or the crypto as well, but that is the key, guys. Think about this. Go inverse to Bitcoin at 69,000. Did you make money if you shorted there? Heck yeah, you did. All right, think about at 15,000. FTX panicking. Did it bounce? Yes, it did. Now, I don't think it's the bottom yet. Like I've said, I still have a target 12 to 13,000, eventually 9,000. Again, the 30,000 level is going to determine whether I believe that the bottom's in or not. As of now, we haven't broken and held above. So as of now, it's not.